Hey, welcome back. Today is January 15th, Friday, and on this post I'll be telling you about the overall crypto markets really quickly before diving into Yearn Finance and Hedera Hashgraph, YFI and HBARUSD, and see what exactly are going on in these two markets. I'll be telling you about the bullish and bearish case scenarios for today, as well as the short-term price prediction on these markets according to what I'm seeing on the charts. Before I begin today, if you guys are watching me on YouTube, do subscribe. If you guys are watching me on TradingView, do follow me as I'll be keeping you updated on the latest crypto setups on my watch list, regardless if it's a good day or a bad day. If you guys want to support me and don't already have a Webull brokerage account, you guys can use my referral link down below. They're still giving away 4 free stocks as of today upon a successful sign up and a qualifying deposit, and I will also receive a referral bonus if you guys sign up under me. Please also read my full disclaimer below. I am not a financial advisor and this is not financial advice. I'm purely sharing my own speculations, opinions on this market. I cannot tell you the future, and you should always do your own due diligence before trading or investing in this market, as it's extremely risky and volatile. If you guys have any questions or comments, please do only leave them in the comment section below, but I will get to them a lot faster that way. Let's see what exactly is going on in the markets first. Bitcoin dominance would be the first thing I take a look at. I've already done a pretty extensive post on Bitcoin dominance and Bitcoin price action on my earlier post today, so you guys can take a look at that if you're interested. But right now, I'm still looking at the head and shoulders pattern I've been pointing out on the daily time frame for Bitcoin dominance. If Bitcoin dominance actually continues trending downwards, I would expect better trading opportunities for altcoins as opposed to if Bitcoin dominance was trending upwards, generally speaking. If Bitcoin price action actually breaks down from this head and shoulders pattern, I do have a measured target of about 63.4, 63.5% range. Bitcoin price action here, as of today, I do see that the Bitcoin price action has formed more of a symmetrical triangle pattern as opposed to that ascending triangle pattern I had preliminarily predicted as of yesterday. Now, the 21 MA, which is the blue line right here, will still be the key support I am looking at, and for the price action not to break. If price action actually breaks this daily 21 MA, I'll be looking at the 12-hour 50 MA, which is the white line right here, for the next level of support. So even if the price action breaks this bottom trend line right here of the symmetrical triangle pattern, it just looks like I would have to adjust this bottom trend line for it to be a bigger symmetrical triangle pattern instead of invalidating the symmetrical triangle pattern. Symmetrical triangle patterns are continuation patterns, 60% chance of it breaking upwards. Verify that stat on your own. If it actually does break upwards, I do have a measured target of about, as far as I can read it right now, it's going to be about 47K as far as I can read it here. So that's measured target, may or may not be reached, could also be overreached. Let's take a look into YFI first and see what exactly has gone on in this market. On Yearn Finance here, I did see that the price action went as high as about 41K a couple of days back before coming all the way back down to about 25K. Right now, it does seem like it's holding, at least on the daily time frame, above the 30K level, as I don't see any clear daily candle closes, okay, like a very solid candle close below the 30K level. I do see that the price action has been getting supported here. So the daily time frame, the price action has not flipped this 30K level from support back into resistance. So that is a good sign, because otherwise the price action could be taking more time to breaking above this 30K level again once daily candle closes more solidly below this 30K level. So now something like this, I would consider this to be a very slight close, but I'm looking for like a solid close that would be a more bearish signal. But right now it does look like it's running within a symmetrical triangle pattern here as well. 60% chance of it breaking upwards. If it actually does break upwards, let's say by January 19th here, or even earlier, January 19th would be the end of the triangle. If it actually does break out by January 19th, then I do have a measured target of about 45K, slightly above. Obviously, if it actually does break out sooner, then the measured target would be adjusted higher. May or may not be reached, could also be overreached. Now, let's take a look into the bullish and bearish case scenario here. bullish case scenario, if the price action just breaks out of this symmetrical triangle pattern, then go towards this measured target of about 46K, 45K, right, about 45K, slightly above 45K, and go towards this measured target. Key resistances here would be the 36K area, as could be seen from the previous trading history, as well as daily candle closes have not been able to close above this 36K area. Bearish case scenario, if the price action actually breaks this bottom trend line, does look like I would just have to adjust this bottom trend line for it to be a bigger symmetrical triangle pattern, as I do see quite a bit of support already underneath this bottom trend line, including the 0.5 fib level right here at about the 25.5K area. So that's what I'm looking at for the bullish and bearish case scenario. Let's take a look into HBARUSD. So for this market right here, it looks like it has been running within a huge symmetrical triangle pattern for quite some time, even back to about February 2020. Right now, it does look like the price action has broken out of this symmetrical triangle pattern, and the measured target, as far as I can read it here, is about 9.4 cents. Okay, so that's the measured target. May or may not be reached, but right now I am looking at a possible bearish divergence on the 3-day time frame. I'll be comparing this high right here with this high, but with lower highs on the RSI. We still have about 2 more hours until this 3-day candle closes. So let's see if the 3-day candle can actually make a significant enough move here to actually negate possible bearish divergence. If it actually does spell bearish divergence here, like I said, my conservative estimate would be for the price action to come all the way down to meet the next moving average on that specific time frame. In this case, would be the 3-day 21 MA right here, currently about slightly under 4 cents. So quite a bit of a drop. Let's see if the price action here, even if there is bearish divergence, would the price action be able to consolidate and wait for this moving average to come up? Will it take off without even touching this key 21 MA right here on this time frame, or would it actually drop sharply and get a bounce, or to actually come and meet the 3-day 21 MA? So those are the possible scenarios I'll be considering. Let's take a look into the hourly time frame and see what exactly it could be doing. On the hourly time frame here, I do see that the price action is forming a cup and handle pattern, with the price action kind of working with the handle right here. The neckline of this cup and handle pattern, I would say, is about 6.1 cents, because I don't see any clear hourly candle closes above the 6.1 cent area. So if I start seeing hourly candle closes, I think that could be a good sign of a breakout of this cup and handle pattern. Let's take a look into the measured target of this cup and handle pattern. It's going to be about 8.6 cents. Let's see if there's going to be any red flags for possible bearish divergence. I think there could be on the daily time frame from this last RSI reading of about 85 here. So that is something I'll be watching out for, because bearish divergence more often than not can signal a pullback. So this is what I'm looking out for on the daily time frame as well, even if it does look like the price action has broken out of this cup and handle pattern. 12-hour time frame as well, and of course some of the lower time frames as well. Let's see on the hourly time frame at least. Doesn't seem so much on the hourly time frame, because I'll be looking for a beat on this RSI reading right here with this high. But on the 4-hour time frame up to the 3-day time frame, there is still possible bearish divergence. So those are going to be the signals I'll be looking out for, even if it actually does look like the price action has broken out of this cup and handle pattern. Let's take a look into the bullish and bearish case scenario. Bullish case scenario here, very clear. If the price action actually breaks out of this cup and handle pattern, I'll be looking out for those possible pullbacks coming from possible bearish divergences on the 4-hour up to the 3-day time frame. That's what I'm looking at. And if the price action go towards this measured target of about, I said, about 8.5, 8.6 cents. Now, the bearish case scenario here, if price action actually cannot break out of this neckline right here. Right now, I am looking for support at about the hourly time frame, which is the hourly 21, the 4-hour 21, 4-hour 50, 6-hour 21, 12-hour 21 is also down there. So if I see a possible delayed breakout of this cup and handle pattern, that would be part of the bearish case scenario, because it could take more time for the price action to actually break out of this cup and handle pattern. And I usually don't like putting my money into something that's not doing anything. So a delayed breakout would be a possible bearish case scenario. So these are going to be some of the supports I'm looking at. If the price action starts breaking below some of these moving averages that are acting as support on the hourly time frame, 4-hour time frame, even up to the daily time frame, then I could say that there could be a possible delay in breakout. Excuse me, not the daily time frame. I think even up to the 12-hour time frame here, then I could say there's a delayed breakout. And of course, if the price action comes all the way back down to about 3.8 cents, which is pretty far down, then I would have to either invalidate this cup and handle pattern or resketch something else that could fit the price action. Now, these are my bullish and bearish case scenarios for today. Let me know if you found it helpful. Give me a thumbs up if you did. Let me know agreements, disagreements, feedback. I would love to hear them. Hope you manage your risk carefully, and if you would like to see any more of my most recently uploaded videos on YouTube, you guys can check out my links up here on YouTube. See you next time.